Welcome to today's market report.
A slid in bank and energy stocks hit European shares on Friday, with a hawkish policy outlook from the US Federal Reserve also casting a dampener on the Stoxx 600's fifth straight weekly gain. The banking index, which typically does well when interest rates are high, fell 1.2% to track an overnight slump in its US peer, as investors booked profits after steady gains in the sector this year. Insurers, telecom stocks and energy stocks lost between 0.8% and 1.2%, while industrials and real estate stocks were among the biggest gainers. Stoxx 600 index was down 0.2% this morning. The index recently scaled record highs on assurances from the European Central Bank that it would keep monetary policy loose, but unexpected signals from the Fed around tapering its massive stimulus dented demand for risky equities this week. If the European benchmark index had ended higher on Thursday, it would have marked its longest gaining streak in nearly 15 years. Germany's DAX index fell 0.3% as data showed a bigger than expected jump in May producers' prices, but German bond yields edged lower, with analysts expecting the adverse reaction of Eurozone bond prices to the Fed to be short-lived. Switzerland's blue chip stock index SMI rose 0.4% to hit an all-time high and was on course for its 14th straight days of gains. The European mining index slipped 0.1%, bringing its weekly decline to more than 5% due to lower metal prices. The US stocks are seen opening marginally higher on Friday, but largely look set for a losing week in the wake of the Fed's hawkish turn. Dow Jones was up 0.1%, S&P were 0.1% higher, Nasdaq climbed 0.2%. The Fed's decision to point towards interest rate rises in 2023, a year earlier than expected, has taken the gloss off large parts of the equity markets, as investors have to begin to adjust to a reality without the very easy funding conditions. Crude oil prices weakened further on Friday, continuing to slip in the wake of the stronger dollar after the Fed's meeting, but remain near multi-year highs. US crude was down 0.2% at $70.81 per barrel. Brent was down 0.5% at $72.71 per barrel. Gold futures was up 0.05% at $1,775.60 per ounce. On the FX front, GBP/USD dropped to fresh multi-week lows amid sustained US dollar buy-in, trading around 138.45 region, the latest. The pair extended this week's post-FOMC bearish breakdown momentum and remained under some heavy selling pressure on the last trading day of the week. This marked the sixth consecutive session of downfall, also the eighth day of a negative move in the previous 9, and was sponsored by a combination of factors. Investors remain worried that the government's decision to delay the final stage of easing lockdown measures to 19th of July could hinder the nascent economic recovery. The concerns were further fueled by Friday's weaker UK macro data, showing that the overall and core retail sales declined 1.4% and 2.1% respectively in May. This comes on the back of concerns about the EU-UK coalition over Northern Ireland Protocol, which continued acting as a headwind for the British pound. Apart from this, the prevalent strong bullish sentiment surrounding the US dollar was seen as another factor that contributed to GBP/USD pair's downward trajectory. The greenback remained well supported by the Fed's sudden hawkish turn and shoot to over 2-month tops. Meanwhile, a sell-off in the global equity market further benefited the greenback's relative safe haven status, which to a larger extent offset a fresh leg down in the US Treasury bond yields. This, along with a sustained break below 100-day SMA, further aggravated the intraday bearish pressure around the GBP/USD pair. The selling pressure around the European currency remained well in place and forces Eurodollar to give away extra ground to new 2-month lows in the 118.70 to 65 band on Friday. The generalized sell-off in the risk complex remains the name of the game, following the hawkish shift from the Fed at its meeting earlier this week. In fact, the pair is already down more than 2% since Wednesday's price action, whilst the dollar index was up 0.38% at 92.23.
This is today's market news. Thanks for listening. We'll see you next time.